Good morning, it's Harvey Jackson. Just going to go through a few items. Ukraine and Trump are just kind of back and forth a little wee bit here, but we'll get into some production numbers or production areas that got highlighted over the weekend. China is rising food demand requires production boost. So they're last couple of years they've had really good crop, and they are going to increase it here. One quick thing here, just that I noted here, that there's 706 million metric tons produced in China alone last year, and they're going to increase their food demand or their food supply by trying to encourage as much production made at home. Same thing in the India story here. Their veg oil demand is quite high, and they've already started to shift where they're buying it from, and they're buying other oils besides the palm oil, which is the major oil that they've been buying, and they're shifting it over to some of the other cheaper oils, expecting that the palm oil will come down in price at some point. And the article to the right side here, they're talking about putting on duties to protect the farmers, and again, duty tariff, same thing. Trump is putting some pressure on Europe for its surrender in the next 3 weeks. And this is the tit for tat here. Ukraine's hosting a European leaders as the funding from the U.S. is decreasing. So they're trying to increase funding while U.S. is urging a vote on the rival European for action on Ukraine ahead of the UN showdown. So there's been some pressure from the U.S. To basically say, hey, don't we should be coming to some sort of surrender. Just it's a very lengthy article. Canada and Mexico to step up fentanyl border talks. So this week is ahead of the March 4th deadline, and there is some pressure from and it's self-imposed pressure probably, and there's going to be some talks from Trump there whether we're doing enough to kind of curb the fentanyl trade, even though both Canada and Mexico have put forth some measures, even though there is not a whole lot that they can spend when their government is prorogued. So some of these things are kind of in the air, and yet they can probably do more here yet. The other side here is just this small package hurdle that the Canada Post or the U.S. Post has been taking duty free up to $800, and he's trying to curb that because that's where a lot of the fentanyl precursors are coming in via that way. So here's your futures focus. We're just looking at this area here only, really, and who are the countries trading. And still, there's a lot of China in there, and a lot more European countries picking up that pace there. COPA numbers from last week. Here we got we're sliding a bit in our capacity utilization. We're down to 90.8 year to date. And this is just some of the numbers in here as well. You can see that local crush data is at 6.4 million metric tons versus last year only at 6. The shipping data is showing 4.2 versus last week at 4.1. And last year was only at 2.4. So we've got a pretty good heavy pace of stuff going through here. And then the tariff and all that kind of stuff is actually probably a little bit pressure on the market here as well. Took this from Bill. There's just one of the things I'm looking at is the commitment of traders, and there's some shifts in the commitment of traders, and not a whole lot to say that there's been some shifts, and it's not major shifts as of right now. So just having a look at the markets. Canola, everything is red on the screen here. Canola is down 5 to 6. Rapeseed is down 3. Soybean oil is down half a penny almost. Palm oil is down 103 ringgit. Crude oil is up. There's the only thing that's really green on the screen here. And then everything else is down. Wheat down almost 10 cents, 9 to 6 cents, depending on which month. So let's just have a look at it here. We're still at the top end of this trading range of this channel going up. And again, just if there's something that needs to turn into cash, just remember where we are in relation to where the market is here right now. So these are still relatively good values, and this is still showing some strength in here as well. November canola tighter channel if we were to take some of those peaks off. So it's just been on a pretty good increase here. European rapeseed, as we stand right now, it's $111, 50 cents more expensive in Canadian dollars than the front month's Canadian canola. Soybean oil, slight trend up here, is still down here pretty, and it looks like the 10-day moving average, it's trading at that rate at the moment. Needed to hold there. Palm oil, we got a pretty good dish here, but it's trading down, gapped even lower as of this morning here. Soybean, here we've got this little bit of a downward slope here. 10-day moving average is pushing it down as well. Canadian dollar, really a nothing sandwich here, not doing much. And I don't expect a whole lot with more Trump, Canada, Mexico rhetoric that's probably going to get amplified here this week, as the trade will be expecting something done by next week. Have a look at wheat. Pretty long candle downwards here on the spring wheat, but still pretty good values where we've been, of course. And here's your new crop. We never got to the $7 target, but it looks like we're pulling back a little wee bit here. We'll see. It almost looks like a gap there, but here's your red winter and your red winter new crop. It did reach, October highs where none of the other crops did, or none of the other wheat complexes. Chicago pulled back here as well, still in this upward trend as far as I can tell. And here's your French milling wheat. It almost looks like a gap there as well. Corn pulled back pretty hard here, so looking to see if we can maybe get a little bit of support here around this $5 mark here as well. Live cattle, pretty steep downward move here in the last few weeks. And here's your just cattle on feed report. And that's all I have for you today.